Morning, traders. Welcome to the Traders Lab. I'm your host, Tom B. Thanks for visiting us today. I stream live Monday through Friday, 11:30 to 1 p. Eastern Standard Time. This stream's about integrating Bookmap order flow tools with auction market theory using the volume profile as a chassis in the intraday developing time frame. And this stream is based on structured trades that are available to everyone in the Bookmap Discord Trader Lab community. As well as a library of webinars, and of course the community, which is a group of like-minded traders that have come together to leverage their collective experience. One moment, please. Got to make a quick adjustment here. Test. Do we have audio in Discord? Okay, we're back here. Let's take care of business and move on. I certainly hope the technical challenges get resolved. General disclosure, all Bookmap Limited materials, information, and presentations are for educational purposes only and should not be considered specific investment advice or recommendations. Risk disclosure, trading futures, equities, and digital currencies involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. Please remember this is not a trade calling room. This is for educational purposes only. Grab a pen and paper. I'll give you a couple statistics. Which you can vet for yourself. And remember, past performance is not necessarily indicative of future results. You do need to do the work. So we opened higher outside of yesterday's range, and that sets up a couple of probabilities for us. First of all, this 5720-ish is what's called the naked volume point of control. What it is the last time we were up here, and of course we did open in a gap. So the last time we were here, this price was too high, and then the market sold off from here. So the nature of the auction is, and think of it really like shopping, is the market comes back to pricing to check it, and it does it in all fractals and time frames. So this price was too high last time we were up here. Now this is the ETH highest volume price. It's called the ETH volume point of control. A naked volume point of control is just a high volume level, same as this, but it hasn't been tested, so that's why it's called naked. Now, we have the overnight mid. That has a probability of getting touched of about 62% probability in this configuration. We have the ETH high, and you should be writing these down, about a 76% probability of getting checked. And the first hour's high, about a 68% probability of getting checked. So that sets up a couple possibilities, naturally. Of course, it sets up all possibilities. But statistically, we're leaning to the north side. So that's the first piece, statistically, north side. Now, there's another piece to this. The market has been long, essentially, going up in anticipation of FOMC, which is, we know, is tomorrow. And the planet is anticipating a 25 basis point rate cut, and the extreme optimist maybe 50 basis points. Neither Either doesn't matter. It's what are the participants doing. The participants have been buying the market. Now, there's a couple possibilities when you come into a gap. One is those who are currently long, knowing that the FOMC is tomorrow, might want to take some dollars off the table, especially when you have a gap. So that's one piece. The other piece is that we might, if we get selling, then we have to be conscious of our potential targets below, but also be aware that the context of the market is up. And of course, this is extremely confusing for all of us. So there is no clarity in randomness. What we have in randomness is the potential to have structured trades that have a statistical edge and to only interact when things come together based on our plan, and then the outcome of any trade is random. And it's very hard for us to do because we seek certainty and to avoid risk. I mean, we all understand that, but if you haven't really thought about your wiring and how you have to push against your wiring, you're going to find it very difficult to trade because the fear of loss and the pain of loss, and we're wired to avoid it. And the pain, whether it's inflicted by a stop or it's inflicted by a saber-toothed tiger, the body, or you might say the limbic system, and the way we're wired always operates the same. So we're always pushing against these instinctual behaviors. So we'll skip trades, we'll bail out, we'll move stops. We do everything that's not in alignment with this business, which is statistical probabilities, not predictability. So let's go into the open. So we know on the open the skew is to the upside. We know on the open that since we have a gap that we might see selling. So we know that. So then what do we rely on? Structured trades. Now there's one more piece I have to point out to you. If this is the retail price from the last time we were up here, and the ETH volume point of control is at the same location, and we're pretty much opening on top of it, that suggests two-sided trade. So what I know is statistically up, possibly two-sided trade, and responsive selling. This is what you would know if you're in Trader Lab before the, shall we say, the gun goes off and the race is on. And then you cannot predict. So there's the RTH open. So now let's follow the yellow brick road. So here's our RTH open. This is retail, and there's a high probability we're going to get here. I didn't give it to you. Let me give it to you. It's about a 79% probability that we're going to get here. Well, we open here, so 79% probability to get here, and then maybe, south or north, whatever it does, it does. So let's see what it does. 79% probability to get there. RTH open here. Now, a couple possibilities. So this is a target, but we basically opened here. So here's what can happen. You can test this, and then we can get on the long side. Or, and this is part of the joy of the whole thing, or we can rotate back, not clear this, and then continue down. So this is resistance, as I define it. And let me tell you, how do I define the resistance? It's not what I do. It's what does the participants say? So if we're thinking about how does the market work, and the other part is how can we narrate the market and try to uncover what might, and always write this down. It's always maybe. That's the best we have. What might be happening? This might be too high. This yellow line is called developing volume point of control. And what it is where volume is. And what I always think of it is like shopping. So if the price in the store for an S&P is too high here, and then the volume moves away from it, and now the developing volume point of control, which represents the highest developing volume in the intraday developing time frame. If it moves lower, it means there's more volume here. But why did we not stay here? Maybe this price is too high, and now this is the retail price. So let's see the behavior. So I have my sellers here, and remember, it can be responsive selling, which means they're responding to the gap, and then the buyers come back in for the continuation, or we go lower, and I can't tell you. Here's what I do know. Let's look at what I know. Too high in the developing time frame, retail in the ETH, and this is a previous location that was retail that was too high. So if I can come back across here, I might continue north. This is my obstacle. If I can't get through here, then I might continue south. That's what I know. Let's see what it does. VPOC migration. Right here, it's looking to me like it's going to go lower. Let's watch. Now, this is a variable high volume node. So, you know, so I'm going, I think I want to get long, right? Statistics say I want to get long, but this is resistance here now. So I have resistance, 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 and this, who knows, retail. So it can do either. So the thing with this is you could have rotation around this. So this is a rather nebulous scenario. So let's watch. I got selling here. This is delta. And this right here, 5 sell stops come out. Now, right here, there's 28. Here, there's 5. Is this exhaustion down here? Let's see. So this is too high, and this is a suspect, but we don't know. So let's see the behavior. What happens? Oh, we come across. We're above here. Now we're above here. We're above here. And this is resistance. We get above here. We can get long here or here. And then we're going for the ETH high, wherever that is. Here, this is our target. So let's see if there's an entry for us right here. Now, I will tell you, I got in a bit sooner, but that is not important. I'll tell you what I did. I'm sitting here going, and I'm starting to think, my brain starts flip-flopping a little bit. I'm saying, well, should I be getting short? But this is what I saw. I saw icebergs here. I saw this guy get absorbed. I see another seller here. So my sellers, and I can't draw lines today, unfortunately, it's not working. So I'm just going to point it out to you. That should be working again by tomorrow. So this is the retail price, and here's where my selling is. My selling's here. So all this is absorption. I don't know that until I break above here. Once I come above here, and here's my buyers, and here I have a seller here. So right here, this is my resistance right there. Seller is here. So this is it. If this is too high, we're going to come down. Instead, I break high. Right here, I took a long in here, and then it was to the overnight high. This is also a potential add in the Trader Lab right here, or a long if you hadn't gotten this. I was looking at this. This was my resistance. Just so you know, right here, clueless, because we could have just hit this and done the Acapulco cliff dive. Here, resistance, break over it, buyers, and here's the absorption, this down here especially. That's why this was a long for me, or this is a long, and you're going for that. Let's watch it. VPOC test, VPOC migration, all supporting the longs. So long, long, long. Now, watch. Now this, definitely not in the game plan. Now let me show you some other targets, by the way. This is a target, and that's a target. So in my plan for today, I have, assuming it's longs, this and this. These are my primary targets for the upside, which of course, as you guys know, if you've been following the stream, they're just levels. They're not predictions. So everything's going good on the long side until we come under here. So right here, I'm looking at it, and I'll tell you, right here, it was like VWAP and mid. So I anticipate there's stops at the mid and the VWAP. I also know up here, we look at this. Let me show you this. Now, I don't know what's going to happen. So when I see something like this, I have choices in my plan. I can just ride it. In other words, take the rotation, which with the idea we're only going to counter rotate and then continue, or or I'll get taken out on a trailing stop. So where's my stop? It's going to be under here, down where this absorption was. So you see we come down here. In fact, right here, let me mark this here. Hold on a second. You'll see why this is important. So this is support, variable high volume node. These act like support and resistance. They're not, it's all contextual. So right here is where the buyers absorbed these sellers. So if these buyers think this is a heck of a deal down here because they absorb the shorts, if we return here, it might be a potential long or not. Trying to remember what I did over here. I'm not going to discuss my trades. I think I posted these in TraderLab. I can't remember. So 17 is an area of support, and we can anticipate these buyers maybe will come back in. Now, there's another part to this. What's the opening swing low? So we have opening swing high, opening swing low. Stops are always on both sides. So there will be stops under here. So we need to know that. And we also know this is where the buyers were motivated. So we need to know this. So we have this level and we have the stops down at the opening swing low. So right here is your support. And the idea is if this is going to hold right there, then that's where it's going. We get VPOC migration. That is saying now this is too high. This is the retail price. And then the possibility is if we can't regain this to go south. So let's see. There it is. Okay. So for this is a short back to here, and then you're looking for it to come out the bottom, which you could see it didn't do. So this got very difficult here because this is now something called mean reversion. It's two-sided trade. Very conflicted kind of trade. You can see this, right? So very difficult. We were discussing this in the TraderLab. Once you get into this kind of stuff, it could be rather maddening. So this, I'm trying to remember. Well, from a structured trading point of view, this is a short. And then you're looking to come down in potentially the next statistic was here. So if you're thinking short, you would be turning the boat around. You'd be coming down here. But we are kind of, it's very conflicted. I found it very conflicted trade. So this here is micro high volume. it's right there. I can't put a line here. But right in here where you see these buyers, there's absorption, and here's your micro high volume. Let's remember where it is. This is too high. Didn't quite get back there. And you could, this is called two-sided trade. It's mean reversion. Not a fun trade. It's pain in the butt. And it's just hard trade because you're going to be flipping around a lot. You'll do a lot of trading and take stops in this unless you're very patient and you just let it kind of work itself out. This is a two-sided day today. So what you're getting is rotational trade. So you need then to be thinking, well, if we come out and now we already tested this, and if we can't get above this here, let's come back here. So this is too high. We check it. It's too high. We come down here. And now it looks like it's going all the way down to zero, right? This was the target on the short. So over here, short, going there. That one didn't go. Back to this, too high, sets up the short, going for this, too low. Mean reversion here comes back here, and then you're looking for it to squeeze out the top. So you have two-sided trade. Always not my favorite. So now we have at 9:30 we get the IB stat, and that has a high probability of getting taken out. First hour's high. So for me, it's all longs, but get this statistic and to try to get up to the targets above. Let's watch. This is a structured trade in the Trader Lab. It's called VWAP or mid to VPOC. So this is a structured long from here to here. And then you have this, and let's go back to the IB stat is a 68% probability past performance, not indicative future results. So this is a great trade in Trader Lab, structured trade, because you have this to this for your scale, and then this, and then up to targets above. So this is a nice trade. And then look what you're getting here. Now this, which was very interesting, and I narrated this in the Trader Lab. I saw this, the sellers. I saw this. This is micro high volume right there. We break under here. We test this. This is called the IBF. It is a counter rotation trade. Now, this you might just exit on this structure, or you might sell it. My target, and I posted this in Trader Lab, was here. So I took the short. So I was long to here, to there, going to the moon, saw my seller, saw the trigger. This is a Trader Lab structured trigger. Micro high volume is in here. There's the test. Blew out of my longs, got short to here. Narrated that. I had 19 as a target right here. So, and then down it went. Then it came back above. Once it came back above, I got long, and the target is here, back in mean reversion. And really, right there is the scale, and then holding to come out above here. And then we get this. So everything is messed up now. So came back here, got the scale, pulled back here, still feeling okay about it. Blew out of the trade. Time to stream. That was the end of it. This is what it had to clear. And here, and this is really the support area right here. So right here, and here's your micro high volume right there. You can see it there. Can't draw lines today. Sorry about that. So this is too high. This is a consolidation here. What happens here? You see the buyers, no bueno, means the passive side is here. What do you see over here? The sellers, and we rotate up. What does that say? Buyers are here. It's a consolidation. When you break out of a consolidation, what do we tend to do? Come back and check it. There it is. And these buyers are absorbed. Sellers are in control here. There's if you can't get above these guys here, then there's, as they say, trouble. So that's that. VPOC migration. Now we got to label this. This is trading. You know, it's not, there's no crystal ball, there's no clairvoyance, and you'll get buffeted and battered. And the thing is that over time, if you have an edge and you just wait for your trades, just like casinos just play games with an edge, over time you have the opportunity, you know, to participate. And but you got to anticipate. So let's go back to what we know. We have this overnight mid, 62% probability, not a recommendation. This is not an easy day, not that any of them are, because you notice it's two-sided trade. The fact that we're below here now and below all of this leads me to be inclined to come out down here. And it's not a recommendation. Here's the thing about it. Let's go back and look at some pieces in fractals. Outside, long to here, this is mean reversion. Pull back here, still okay. This is the mean. So from here to there is okay. From here to there is okay. From here to there is okay. Then you have the break. Now this is a problem right here. And here's what is now too high. Now when this happens, right here, the antenna is up. And because I know that for this trade to be okay, I have to come back above and come above here. That's what I know. So right here is where it fails. And then in subject to your plan, this is a short or an exit. You know, it's all up to your plan. This is now the new retail price. This is too high. So the possibilities are the following. If I rotate up, I know this was too high. I know this is too high. This is resistance. So let's go take a look at it. Migrated again. So this is too high. Break here, test, too high, drop down. This is resistance, which is this. So right now, the possibility still is to go here. And maybe, actually it is, to go here and maybe even fill the gap. Don't know. Not important. So that's the current lay of the land. There's really not much more to this. This, if you, depending on how you read this, this is a potential short, and that's resistance. This here. So if we come up here, we want to see what happens here and here. And then we'd be looking for shorts possibly out the bottom. And it could still do anything because we're in a two-sided trade. What appears to have happened here is that we've run out of our buyers, and the buyers were doing a heck of a job all morning. I saw a lot of selling in here, but the buyers were doing a heck of a job. And it looks like now, maybe not so much. Don't forget, we have the FOMC tomorrow. So that also influences the trade today. So we'll have to see what happens here. So our next area to observe is here and here, because stops are going to be at the mid and the VWAP. This is our high volume area here. So, and it's pretty close. You got like about 9,000 here, 8,200 here. So there's not a substantial difference in volume. If we can't get back here, we continue lower. This is all very important behavior right here. Buyers were here, they were absorbed. You see the selling iceberg. Now this can go down from here. The last short would have been here. And this is your resistance. The key in Trader Lab is that when you put a trade on, you have to get risk neutral to cover where your stop goes. Your stop needs to be above this. And I think there's a reasonable chance you get taken out of the trade because of this. because there's stops here in the market. If we run out of sellers, what's going to happen? The buyers. So anybody who's short in here might get taken out. So we always have to anticipate what might happen. We can't predict what will happen. So I know if it comes up here, I can get this. And if I come out anywhere, I would be looking for shorts to continue down to the statistic. That's about it for me. You guys have questions? Guys, is everything okay on Discord? Okay. So we have, you're getting the screen and the audio and everything is okay? All right, good. Thank you. Okay. So let's keep a watch on this. And guys, remember these are not trade recommendations. This is for educational purposes. These are based on structured trades. And, in the business of trading, just let's be real about it. There's good days and there's days that are just you're flipping around like a whirling dervish because you're trying to stay in alignment with the market. The business of trading, from my experience at least, and it's gone on 45 years, it's not about predicting anything because we can't. Casinos can't predict what's coming out of the deck or how gamblers play the cards either. They do really well. So if we build our business on a successful process of gaming theory, then we are really playing structured games, if you will, or we call them setups, but they're really, each one is an individual behavior that if we can quantify it when it shows up, we'll be able to determine if it has an edge over a large sample size. That is really the business of trading. Then it's whatever happens, happens. And if you control yourself and have a plan that has an edge over time, like the casinos, even though the outcome of any individual interaction with the gamblers is random over time, they extract the dollars from the gamblers. That's our business. And it's not really anything more than that. What we experience doing it or attempting to operate in uncertainty is really, I think, the larger challenge. I believe anyone can learn how to trade if they do the work. Being able to trade is a whole different issue because being able to means being able to separate yourself from your fear. And let's be honest about it. We don't want the pain of loss. We don't want to be, quote, wrong. We don't want to lose money. Right. So that stops us from doing what might be in our best interest, assuming we have a statistical edge. Remember, this is resistance. Right here. So that's the business, and that's what Trader Lab's focused on. There is no holy grail, secret sauce. I know all the internet marketers are out there, and they're going to say this is the one thing you need, or come and pay a bazillion dollars for a chat room, and you'll be clued in, or go to a trade calling room. That's why that's all a waste of your time, effort, and I think it'll give you some brain damage. Just an opinion, because all of us want somebody else to do the work and kind of hand us the red light, green light. There is none. But if you understand how the market works, you might understand why this is an area to short and why it was resistance. Did you know that? Not knowing what would happen, knowing what might happen. That's the difference. In Trader Lab, we know what might happen. We don't know what will happen. We can suspect where it might happen based on our understanding of how the market works. We know that this is resistance. And we also know that if we come above here, this is next on the list. I also know that my next trade, if it comes out here and squeezes, which is really what I like to see, I like to see where retail traders have their stops placed, that if we can get up into them, and then I see absorption on the other side. I want to be like the other icebergs that are up here that are selling into these buy stops. And if we got up here, I'd be looking to come back here. I can tell you already that's my next trade. I also, and that's not a recommendation, I can also tell you this is resistance, right? Now, it's not about predicting. It's about understanding how the market works. And it doesn't mean the market will stop here. Resistance is only what it is, resistance. And if you take it out, then what? Well, it gives us more information. So if I'm sitting from a short over here, my stop's got to be a little further away than this. But if I was looking for a trade, or if I'd taken a long, let's put it this, which I wouldn't here, I have to scale here, you see. So no long for me, but if anything, this is actually a short or resistance. And I don't have a trigger here either. Here's the other thing. I get my buy stops, I get my iceberg, I get my sellers. Now where my volume is sitting, let me show you how this works. Now I'm not saying this is not a trade, I'm just showing you structure. So there's your resistance. Nothing here, right? Bang, bang. What are you going to do? I don't know. What do we have here? Let's take a look at some microstructure together. Here's volume. Here, you can see it. This is where my variable high volume node was. Too high, right to the tick. Who knows? Volume now is here. Let's watch. Sellers take over here. Where's my micro high volume? Remember, too high, right here. Now where is it? Here, right there. Let's see. Let's just watch the structure and see what it does. Right here, too high. See? So now this is advanced, but you can learn this concepts like this, and then you can reverse engineer them. This is a language of the market. I don't use any indicators. I do use volume. So, and I use participant behavior. This is an order flow. This is as close as I can get to the real-time behavior right here. What does it tell me? It tells me too high. When I break here, this micro volume gives me something to lean on right there for a short, if that was in my plan. I'm not saying it is. I'm just saying, how to read it. That's what I'm sharing in the stream, not what to do. That's up to you. But if you can read it, you can then determine, is this a location under these conditions and context that you want to participate in? And if you did, where might you be going? By the way, there's about a 30% probability that we take this out, because that would create something called a neutral day. So we have a 30% probability to take that out. And to get here to the ETH mid, it is a 62% probability. Nothing says we're going to do it. But if you would turn the barge around and you were sitting short and you're in Trader Lab, you might, I'm always going to say might because it's individual plans, you might be going for that. And there's more. And the high, yesterday's high is here. You might even be going for that. Let me make sure. So the shorts here, here, here. But this is a high probability one. And there's also a 63% probability that we get there. So we have overnight mid, 62% and about 63% here. So I think that's right. Let me look here. Whoops, might have that right. No, 63%. So this is where we're going. Not a recommendation. I hope you're getting something out of this. This is Trader Lab. And when the market is choppy, we all get spun around. So it's going to happen. You're going to take stops. Casinos pay the gamblers. It's called overhead and cost of production. And I understand our wiring is to predict, to be right. I get it. We all get it. If you've been trading, you get it. What you need to understand in trading is that you have no control over it. You only control yourself, and the way you control yourself is have a vetted, structured trade plan that tells you what to do. It's all planned before you ever put a live trade on. It's all the work is done outside of trading hours. We're not doing, what do I do here? No, you know what you're going to do. You know, if you're in Trader Lab, what this meant when this happened here. You know this rejection is too high. You know this rejection is too high. You know this migrates down. This is potentially too high. You know when we come back to check it and we reject it, it is still too high. When this moves down, it says now this is the retail price, which means too high. We break here, we come below. We can't get back, guess where we're going? South. How far? No idea. What's your job? Follow the yellow brick road. Have a trade management plan. How far back do you keep your trailing stop, if you do? Or do you just have your stop way out here someplace and you take a nap? We have a trader in the Trader Lab who does that. He's got what we call a Barca Lounger. You guys know what a Barca Lounger is? So 29% probability to take this out, 63% for this. And you're going, well, why is one different? Because we already took out the first hour's high. So the prospect of what's called the neutral day, which means both sides are active, which they are. So it's a lower probability to take this out, except we fell out and we missed this target up here. We got pretty close. There's no precision in all this. So this was my next target, and these are in the Trader Lab, 38.5, I think it was. And then there's the other one up above, which we talked about. So this, and maybe that. So that's the short. And if for the long ball, this, which is not on my radar at the moment. If we get in yesterday's range, then this becomes a target. And statistically, only 31% probability. So you can see the stats, the primary stats are really, if we get under this, and there's stops under this, this is the current low of the day, is going to be here, and maybe fill the gap. Are you guys tracking? Do you have questions? Forlot is asking me in the Bookmap Discord Trader Lab community, do I use the volume delta? This is the session volume delta. What do we got here? The chart volume delta. I do not use this delta because I'm using this. So what I'm doing is this reflects what's on the chart. So there's more selling in this leg here. Obviously, it's going down. We can see there's selling. I'm interested here that I'm seeing buyers absorbing the sellers. That is something I want to be conscious of. Look at the icebergs, 2,400 icebergs, but the delta is negative. What is that telling me? It's telling me the aggressors are the sellers. The icebergs are the passive side. They're absorbing the aggressors. Now, I'm still going for this because of the statistics. But what guides me is not this. It's what's happening in the auction. So I don't need to see, I'm just saying personally, is not material in my time frame. But what we see is overall they're selling. But you could have selling. Don't forget what delta is. Delta is the aggressor. Not necessarily the fact that you have an aggressor does not mean that the market will go the opposite way, because the passive side can be absorbing the aggressors. And we're seeing that here. We're seeing the buyers are here. That's the passive side. So even though the market's going down, and that's the delta, we need to be very aware that this is under accumulation. And that doesn't mean I get long at some place out in space. At least for me, and I'm not saying, there's a right way to do anything. I'm saying it's only probabilities, For me, even though I see the buyers, I see the selling delta, I am short, or would be short. I'm not currently in this. For this, because of the statistics, and I know that all the longs on the way up have their stops here. So this is a target. This is my target on this trade, and I am aware of the buying. We'll see what that means later on in the session, and you guys need to be conscious of it. So delta does not operate in a vacuum. It is one piece. It is the aggressor. But what are the aggressors made up of? Initiative sellers, new sellers, and sell stops. Sell stops become market orders. So all these stops coming out are also in the delta. So when you're looking at delta, you need to be aware what the components of delta are and what's on the other side. And that's why you need order flow. And for me, having the stop and iceberg detector and seeing the absorption is giving me regular insight that I wouldn't just see if I'm just looking at price. So this is just telling me there's absorption. It doesn't mean anytime you see absorption or 1,000 or 3,000 icebergs, that's not a long. It's telling us information. Now, how do we overlay that information? For me, I added in on top of the chassis, which is the volume profile. This tells me the auction or the perception based on volume of value. And the purpose of the market is to try to figure out what's too high, what's too low, and what's just right. So let's watch these, remember, targets. So this is a target, not a recommendation. This is a sweep. We want to watch now very closely what happens right here. Now remember, so right here, target. Now we've got to watch this. And there's a lot of absorption. All this absorption is taking place. A lot of absorption right here. We got the stops under the low. We got our target. A target, not the target, but a target. So let's watch. So we got to be right here, very conscious of what's going on right there. This can be a continuation structure or a trade management structure right in here. So let's watch it. You've got to be conscious of this. Let's watch. Right here, we had our buyers here. If we can keep going, now this might be done to the downside. I don't know. It's not my job to know anything, only to try to follow it. So this here is resistance. This here, right here, is resistance. That's resistance. So we got to watch it right here. This is big for continuation, lower or squeeze. This is one of those moments, not a recommendation, where we have it boxed in. Basically, it's here and here. So if we get above here, we squeeze. If we don't get above here, then we continue. So we're going to be very aware of what's happening right here. Got to be aware. Remember where our level is. Here, break, test, dump. This is still a short. And you got to be very careful here because this has the potential to come all the way back in. This here is very important what happens here. Because either we're done, though it hasn't broke yet, it's still in the short structure, and then we can come back in here and even down lower. But if we come back above here, then this outside edge of this consolidation, other than picking and continuing, so if we come up in here, this trade might be over, the short, and that's all you got in this. So I'm giving you the scenarios because that's all I know. I know if we come up here, the short could be over. I know if I come back up to here and stay below here, then I can come down. That's what I know. Now, I'm not here to tell you what it will do because I don't know. I know what it might do based on structured trades that we have in the Traders Lab. And what it is basically south of the border from here or break back inside and come back here. That's what I know. And that's not a prediction. It's just possibilities. So let's watch. You guys have questions? So now we have our next target coming, and this is also possible. It's about in the 30 percentile. It is possible. This is a probable. This is decent. And there'll be stops under here and maybe in here. This is also important too. These levels in here are important levels, as is this. We can anticipate buying in front of this. That means shorts who might cover, so you may get some buying ahead of filling the gap. There's nothing wrong with that if you were short. If you took the short here, there's nothing wrong with this short trade. This is called the IB continuation trade. And remember what happened here. Okay, you want to watch these. So this is, for me, filling the gap. These are areas to look at potential exits or trade management. Not a recommendation. So let's watch. You got absorption here. You haven't seen any of those guys for a while, have you? Now we want to watch. There's a stop sweep. Absorption. This is a over-under right here. There's the micro volume structure. It's right there. You can see it filling in. This is like a micro VPOC, which is, you'll see. I'll show you in a minute. So this is too high. There's your sellers. This is your consolidation break. They were absorbed. Right here is resistance. Let's see what happens here. So in this trade, you have options. Your stop could be here or your stop could be right above here, a couple ticks. Not a recommendation. And if the trade's over, the trade's over. You know, it's just that's as deep as this gets. So the trade would be over, subject to how you manage your trades. This is how I manage my trades, or I should say one of the ways you can manage your trades. There's other ways to manage your trades. Let's think about this. The sellers absorb these buyers. There they have it. We see absorption here. We have our buyers here, and our volume is here. Sellers are here. Stop sweep here. Get our buyers. Sellers are here. Buyers are here. Too high. You get your rotation here. Right here, everything is okay for the sellers. Break here. And then right here, we have our buyers. We have our buyer. And right here, it's once you're above this, there's the last shot by the sellers. You're out right here. Is that good? Is this a way to consider how to manage your trade? If that's your goal, Now, nobody gets all of it, but I think that's okay. What do you guys think? Are you guys tracking? Are you guys with me? Give me a thumb up in YouTube if you're getting something out of this. This is Trader Lab and this is process trading. Now, let's come back. What do we got? Let's come back to the microstructure. What is this? Now, when I look at this stuff, now this is all fractal and time frame dependent. For example, this is micro high volume. Sellers were here. I know this was too high right here because the buyers got absorbed. I know this is too low because the sellers got absorbed. If I take a short here, now I'm going into something a little different. I got to cover here. This is more, you know, it's not the way I don't trade for these rotations. I trade for larger rotations. But if I had a reason called the overnight mid here to trade, and this is my micro high volume structure right there, I could sell that to here because it's support. But this is not Trader Lab. This is concept. Let's call it fractal. Because what this is up here, and all of this is really, the volume is in here. Sellers break here. Seller, test, short, off you go. What about this? Long, right? Or cover. What about this? Short. What is this? Support. You see? Can you guys see how I'm doing this or reading it? You see where this comes from? Are you guys tracking? How are we doing in YouTube? How about a thumb up in YouTube? By the way, if you're visiting in YouTube, there's a link down there. If you want to visit Bookmap Discord Trader Lab, there's no cost for that. You do need to verify your email address if you come to Discord, even if you already have a Discord account. Say for security, keeps the the riffraff out. And so notice this was resistance, which is here. If I get over this, then I can continue to squeeze. If I come in here, it might set up the opposite of what happened up on the top, mean reversion to come back here. Because what did we do? We got into our high volume area and we filled the gap. We got here. So this was our area to potentially, now remember, these are not trade recommendations. Overnight mid, this is more scalpy, okay? And that's not the way I trade typically. I can trade rotations, but to me, over time, for all of these that you get, I'm going to tell you just it's a philosophy and it's just personal. You guys can trade any way you want. It doesn't matter how you trade as long as it has an edge. You're not here for action. You're here to extract dollars when the opportunity presents itself and you have an edge. If I risk 2.5 points, let's say up to 3, which is pretty much my outside risk, or 2.5 points, 2 and change, whatever, to make this or to make this, or I can sell something at a better location and go for a larger rotation. By the way, where did we come back? See? Resistance. Short to there. What's this? Resistance. Back to here. Actually, it would be around here. Right there. And then maybe out the bottom. Or not. Let's see what it does. These are structures. And what they are based on is something called fractals. So when I'm showing you this higher time frame or developing time frame behavior, if you think of Russian dolls, Matryoshka dolls, how they're inside of each other. That's all what this is. So when you get this chop, 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 chop thing, it's a consolidation right there. So you have sellers here because the buyers are absorbed. You had your buyers right here. The sellers got absorbed by this iceberg. We come back here. Here's your high volume. When you break below it, it's a trigger. Now, if you weren't able to sell this, you get that. When you get this, you cover here, and it comes back to this. What happened here? This is too high. What happened here? There were buyers. What happened to them? Under the bus. Where do we come back? Here. What do? Sell it. To where? To here. We cover. What do you do then? Well, you got a choice. You can get long back to here, which is to there, or if you think the market's going lower, you're only taking shorts because all you did was pick the stops here and come right back to this, another short. What was too low? This, right here. Sellers are here, buyers took over. So what do we know? Support. What do we do if we take a short here? We cover or scale. Then where's resistance? Here. Can you guys see the structure? This is how you can narrate and navigate. So since I don't use indicators, I'm not looking at something, over here that crosses over and says get short here. No, I get short there. I cover here because I'm trading the structure and the order flow. I'm not trading a backwards looking indicator. I don't. And I find that indicators are not a solution for most traders. Most retail traders are fixated on indicators, getting the right mix of indicators and time frames, and basically, I think they make a mess for themselves because they don't understand how the market works, and they can't stay in alignment with the market. They're passive in looking for an indicator to translate. So what I'm doing is translating in real time. What is my indicator going to tell me? Does my indicator tell me that I can get short from here to here? Does my indicator tell me that I could get long from there to there? Does my indicator tell me that I could be short from here to the top of this right there? See? And so let's look at what we've got here. This is too high. This is too low. I've got a higher high here and a higher low here. This right here might be support, and we may come back here. Not saying we will, but that's a possibility. So I'm always thinking in possibilities, not anything more than that. In fact, write this down. You got to anticipate to participate. So it's not prediction. I can't predict anything. I can navigate what I read in the order flow and the participant behavior. Remember, the market is made up of participant behavior, and your indicators are taking that participant behavior and trying to quantify it in some fashion and translate it for you. That's fine. The thing of difference is I'm doing it here, not here. When an indicator finally realizes, or measures some, I understand what's going on here because I have an order flow tool and I understand behavior. So I understand support, I understand resistance. I understand support, I understand resistance. One of these is going to break. If we break to the north side, we're coming here potentially. If we fall out the bottom, we continue on our merry way. That's what I know. That's as deep as it gets. Are you guys tracking? Hope you get something out of this. And if you're in YouTube, please give a thumb up. And remember, if you're interested in visiting the Bookmap Discord Trader Lab, there is no cost. You do need to click the link below if you want to access that and verify your email. There's a lot of additional education also at no cost: stocks, options, crypto, order flow, of course, with a high tier tool like Bookmap, market maker behavior, swing trading. I don't know if I said options, but a lot of things. And if you have a Bookmap subscription, don't forget there is the Bookmap Academy where you can get individual coaching and mentoring, It's available to everyone who has a Bookmap subscription. And just as a little side note, if you're visiting us and you want a Bookmap subscription, you can download the free digital version of Bookmap. Then you quote are a subscriber, and then you have access to the exclusive education, order flow education and coaching and mentoring that's available to subscribers exclusively, and all the exclusive events for subscribers. I think that's a good thing. So remember what we have. We have too high, too low. Which side? Well, since nobody can predict, you just put your trade on, you manage your trade. And what's happening tomorrow? Oh, yeah, that FOMC thing, that might be material. What do you think? Market's been going up the past couple of days, hasn't it? Well, if the market's gone up and the market is long, that might set up more selling because there's a lot of longs in here. Now, I can't predict that. I'm always thinking in possibilities, but not prediction. We all want to, I know for myself when I started in trading, I thought it was a business of predicting what was going to happen. And you would think they're all the same thing. If you put yourself in a mental state of knowing you don't know what's going to happen, but only following the trades that you've structured and know have an edge, then you measure yourself not by the outcome of the trade. You measure yourself by, did you follow the plan that has an edge? That's how you grade yourself in this business. It's not by, did I get a winning trade or a losing trade? Everybody has winning trades and everybody has losing trades. In fact, gamblers walk out of the casinos with cash, and traders who have absolutely no edge and no plan have winning trades. So it's all the same. So most of us, what happens to us in trading is that we see patterns and behaviors that win, and then we go about trying to make it win better, right? Well, most of those behaviors are random, and they have no statistical edge, and they will never have a statistical edge. But we're going to put our effort, because we see something catch the 20-point move once in a while, we're going to put all our efforts into making it better. I call that trader Groundhog Day, because we all wake up doing the same stuff, or at least in this business, we've all done it. I've been doing this going on 45 years. I certainly did it. And I did it with trading systems also. So I built systems because I was managing dollars and I needed a way to manage across a lot of asset classes. And it was more trend following. Okay. It wasn't this kind of thing. But all a trend following system is just more higher time frame. What works in here works in all time frames and fractals, if you will. I don't use time other than the RTH bars, if you will, or candles, for higher time frame analysis. But otherwise, if these were 60 minutes or 30s or 15s or 1s, it'd all be the same. So the behavior of the market is generic in all time frames and fractals. So when I built systems, it was really, I had to enter during the day. So it was all the same kind of components, but it was, just higher time frame. We're inside of yesterday's range. This is possible. And so is this. So that's where we're at. Now it's just trade management, guys. Remember, support's here. Support's here. Support's there. Notice where we're coming. This is how the order flow can help you, because there was absorption here. There's your buyers. Tested it. There's your buyers. Come back to this. Tested it. There's your buyers. Your sellers are here. See them? Your buyers are here. See them? Now you know where resistance is and support. Now the next question for this astute audience is, are we going up or down? Come on, step out. What do you think? Are we going to get through here, or are we going to fall out the bottom? Anybody? Go ahead. We're not going to. Go ahead. Harry, you're asking me about ETH and RTH. Well, yesterday's RTH VPOC is what's relevant here. The ETH is only relevant based on where we open in the RTH, because that's the last auction. So this 97, this is the next target. It's only a 31% probability, but it is a probability. So that's possible. Guys, is this 92-ish? Is this a good level, or is it something that's left over? Can you confirm that for me? Lower? Okay. Fall out the bottom? Thank you, Debbie. How about YouTube? Anybody have an opinion? Are we going lower? I think it's a safer answer at this point, but that's just me. Lanchos, the behavior is generic. In other words, this process is how all markets operate. And you have to vet the actual product you're trading. So it's a stock. It's got to have enough, it's got to have enough liquidity and everything. All these markets need to have volume. You can't trade any market that doesn't have decent volume. So yeah, this works on stocks. Works on anything. So anything you can imagine that's on in a market, you can trade it. Stocks, options, anything. You just have to vet it. You could trade funds with this. By that I mean ETFs and anything. As long as you can chart it and it's got volume, you can do your thing with it. You can swing trade with this. You could do whatever you want to do. Guys, is this 91, 92 anything? Stale? All right, thanks. This is not a good target. Stale. Okay, so this is our next target down. It was a 31% probability. Past performance, not indicative of future results. And now, value area low. Let me give you a statistic on this one. Very low, 17%. So, and then yesterday's low. These are all low probabilities. Doesn't mean it won't happen. Remember, the statistics are not aware of the following. The market is long over the last couple of days, and FOMC tomorrow. Statistics are not, doesn't reflect in it. So what we need to be doing is, once we got under this, then you can stay short. So you could be short from here, test here, cover here, short here, supports here, back here, short, whatever you want to do. What do you think the trend is? That's up to you. Me, no longs. And then it's trade management. That's all you got here. And sure, we can do anything. This is also possible. Anything is possible. That's the thing about trading. It's all possible. Not predictable, but possible. So let's come back to trade management. Let's look at what we know. Too high, trigger, test, short. Resistance is here, right there, right where that line is there. And guys, normally I can draw these lines. My drawing tool went to the happy hunting ground. So that'll be operating probably by tomorrow. But I can't draw these lines today without it being very difficult. There's another one here. This is, when you see this volume, like these nodes, these are high volume nodes. And what a high volume node is like a volume point of control. So it's a auction, chop, 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 break high, break low, This is too high right here. There's your test of the outside edge right there. I break, sellers in control. The last place the buyers took a shot, and don't forget, these sellers are above them. So this is resistance. Buyers go, yeah, no, not so much. We come back and check. Too high. Sorry, Charlie. Remember Charlie the tuna? Sellers, sellers, sellers. Buyers try here. Let's watch. We have a buyer here. We have our micro high volume in here, right there. Buyers are here. Buyer got stuffed here. So the sellers are in control here. Sellers are in control here. Buyers are here. We broke above them. If we clear this, then we're going to squeeze. If not, right here is your fight. Sellers are here. Buyers tried here. Passive side was in here. The guys who sold over here and absorbed these buyers are still active here. Now, if we get above, then that changes things, right? Then they're going to squeeze. But right now, this is the last place the buyers, came out of the woodwork and charged. It's like a counterattack. Think of it like an army. If the sellers that were here in this volume go, oh, really? Thank you. And they take control again. Now the buyers push back. It's always two sides. And where are the sellers activated again? It's here. Same place they were here. That's why this. That's why this is how you might manage your trade. Once you're breaking and you fail here and you take this out, you move your stop to where the buyers got absorbed. Here. And the market tends to come back and check these levels. So let's watch. So the probabilities are not high for this based on the statistics. But the thing about this is, and in TraderLab you would learn this, it's about alignment. Statistics give us an edge. They don't predict anything. What you need to know as a trader is what's called context. That's the condition of the market. And that's another thing you would learn about in TraderLab. Not to be looking at your indicators so much as understanding how the market works. Imagine what you might do with an indicator if you actually really understood at a visceral level why this is happening. And it's not because your oscillator, your MACD, or whatever you're using crossed over somewhere. That's not why it's happening. And how do you stay in alignment in microstructures? And you could trade in this if you wanted to. Now that's very advanced because the time frame is very short. So for developing traders, if you work the broad strokes, you're just hanging out. The last TraderLab short was from here. Structured trade, by the way. Here, and you could just be sitting short managing your trade. Or you're micromanaging more often from this to this to this to this. You see how many trades are in here. This is where your trade plan comes in. But all of this is shorts in the TraderLab. There are no longs. There's trade management. Short, trade management. Short, get below. Trade management. Back here, high volume. Short, volume. Short, volumes here. Breakdown. Here, south. I mean, there's no longs. You might be out of your short depending on what your plan is, or you're just adding to them if you're advanced. Or you're just sitting back in your Barca lounger, like one of our traders, and only a 17%-ish probability of this. But what do we have here? This, and this is a target. 62 is good, is that right? So this is important. This is important. So this is a good target, the 60. Is that correct, guys? So to think about this, guys, remember, we're not in the business of predicting anything. Who knows where the low of the day is going to be? Raise your hand if you know. 61 half. Yeah, thank you. This is an open target down below. Never has to get there. Here's the thing. We have stops under yesterday's low. So fuel. So I'm still going for this and this. Not a recommendation. Market can do anything. It could care less. Truly could care less. It doesn't care about you or me. So what do we care about? Having an edge, only trading when the edge shows up. You can create as much edge as you want. That's what we do in TraderLab. It's about the business of trading, not the fantasy. We all have a fantasy when we start. When I started in 1980, believe me, I had a fantasy, and I had no idea. And especially back then, technical indicators were new. Wells Wilder was the rage, and that was just becoming accessible. We didn't have computers, no PCs, and only the internet didn't exist either, I'm saying. So all you could do is buy a book, go to an expensive seminar, and if you guys have done that, you probably know how valuable those can be. So, and now you have the internet where anybody can sell you something and appeal to your desire for success. Like the only thing you ever need kind of a deal. Have you ever gone that route or joined chat rooms that charge a lot of dollars and don't really give you anything of use? There's a lot of that. So you have to use your discretion and be careful. There are good streamers out there, good chat rooms that are going to help you for sure. I would say most of them, not so much. So how do you differentiate? I think you should come and check out whomever. There is no holy grail, but you do have to be careful, for scammers and all that kind of stuff. I've got about 7 minutes left. If you have any further questions, please post them. Remember, if you're interested in the Bookmap Discord Trader Lab community, you have an open invitation. There is no cost. There's a link in the bottom of YouTube. And when you come to Trader Lab, it's a great community of serious traders. It is a serious environment. We're all working together to get better. No matter how long you've been doing this, you're never, quote, there. You're always going to want to get better. So you see the behavior here? This is why. I mean, are we going to take this out? Possibly. But can I predict that? No. What I can do is I can look at this and I can look where the behavior might be changing. Now, what I don't know is this is resistance, this volume here. I might only come out here and then continue down. Or the trade could be over here and I'm not worried about it. I just go, I've got a nice trade here. Last structured trade was out here. Take that. How many of those do you need a day? That's what the Trader Lab is built on. Not action, but consistent application of statistical edge. That's what the Trader Lab is about. And if you are interested, click the link in the bottom of YouTube. Come on over and visit Trader Lab. There's no cost. Also, but you do have to confirm your Discord email. The other thing is there's a lot of there's a library of webinars. You can download 60 PDFs of these. I'm not going to spend any time really with them other than to tell you these are PDFs of these trades with actual live trades and screenshots. I did these many years ago. I'm not a vendor. There's no course. It's really more about community and not doing what somebody else does, but finding what aligns with you psychologically. That is really what trading is. It isn't replicating somebody else's thing. What I do, I might just take a short from out here and just hang out with it, trail it down and let it take me out and not think much about it. Just go for the bigger move. Other traders are going to be bobbing and weaving with this thing, because it's their personality type and their psychology. You need to find that for yourself. So I can share the tools with you, and now Bookmap has created a terrific community where you can find other traders that are like you. It's mutual accountability. You break a rule or something of your trade plan, we're going to talk about it. If you get frustrated about what's going on and you can't figure it out, we're going to talk about it, because we're all the same. We're all the same. The problems we encounter in trading are not unique to you. They're generic. So if we all understand each other's problems, can we come together and help each other solve our problems? Because they're going to manifest themselves at different times and to different extent with different individuals. So that collective leverage is what really gives us the ability to potentially improve and to then move outside of what other retail traders are doing. I have a little saying that I always like to share, and it's called, think like a retail trader, don't act like one. What do retail traders do? Are you doing what they do? Or can you take the experience and the investment you've made in retail trader behavior and maybe get a yield from it? You have equity and it's trapped based on your experience. If you can't unlock that equity, which means the dollars you've invested in your development, are you going to keep repeating the class, or can you derive and extract a benefit from your experience versus thinking and believing, and this is an issue, believing you're doing the right thing? It just needs to be made better, because it might have nothing to do with, quote, the right thing. It may have to do with your beliefs that random behavior can be improved upon to create an edge. And while it might, most retail traders are going down that path, and it seems not to work for them. Have you ever thought why? If you don't know the answer, then I invite you to visit the Trader Lab, and it's open to everybody at no cost. You can use the link in the bottom of YouTube. You can download the 60 PDFs of these structured trades. You just pick one, and you reverse engineer it. Make it your trade slave. In other words, you got to be able to teach it to somebody else, or else you're not qualified to call you to say you know how to trade it. That's the depth and commitment you need to make to understand what it takes to build this business. Notice what was here. Notice where we came. Notice what's there. Subject to your plan, these are all trades. This is advanced now. I don't advocate any of this. I advocate the broad stroke to learn how the market works. And then you can go from there. Also, one last thing. If you go to bookmap.com, there is a free digital version of Bookmap that you can kind of get your hands on. And, it's free. A lot of the, companies say, oh, you can pay for the trial. No, try it out yourself. Click the link, download it, and then when you come to Trader Lab, you can also attend the Bookmap Academy for coaching and mentoring. And that's available too, but you do have to be a subscriber. But there is a free subscription. Think about it. And come visit the Trader Lab. Thanks, guys. Please give a thumb up. Thanks for visiting. I appreciate your time and interest. I look forward to seeing you tomorrow. Trade safe, and remember, FOMC, so be sure to wear a helmet.